Microstrategy's plan over the last 4 years has been to acquire as much Bitcoin as possible. But Michael Saylor has been hinting that they might be changing that up. Will that hurt them or help them? Let's dive into it. All right, so if you are unfamiliar with the Microstrategy's strategy as a whole, basically it was to have a business, sell debt on that business, and then buy more Bitcoin. Isa, as part of the GetBase team, actually did an incredible overview, incredible deep dive on this topic, and I highly recommend that you go and check that out. So basically, Michael Saylor started with this cash flowing software company that was making piles and piles and piles of money. And he didn't know what to do with the money. Then he discovers Bitcoin and figures, I'll just buy Bitcoin. But like every fiat bro, you can't just take what you have and then buy what you need with it. You need to exacerbate it and get more, because we live in a fiat world. Your money's going to obviously just deteriorate. He does this. He sells debt. The cash flow from his businesses pay for that debt, and he uses the big kind of front running of capital to buy Bitcoin. Good thing. And look at how it's done. I mean, pretty good. The top 10 performing stocks in the S&P 500. MicroStrategy is up 1,600%. This compared to NVIDIA, which is the hottest kind of tech startup, seeing astronomical gains over this big AI bubble, only up 1,100%. The fact that there's someone that we can compare them to and then say only 1,100% gains is should go to show you just how outsized this performance has been. But now with this outsized growth he's performing, he's basically selling options on the stock volatility. So not only is his base business is a cash flowing software company. Perfect. Now his secondary business on his balance sheet anyways is debt based on the future production of that software company. And now there's a third rung to it, which is the performance of the stock as it relates to the debt's ability to be serviced by the future promises of production from the software company. We've kind of got this like 3-tiered system happening. And of course, as all things happen, when they go up, they go up. When you use leverage, everything is just like expanded to the nth extreme. And then after the high, you're going to get an insane low. You use leverage in finance and you get these insane bubbles, like this 1,600% year-over-year growth as the number one performing stock in the S&P 500. But what happens in the low? What happens in the crash? And that's what we're going to be kind of looking at today. Here we have Chris on Twitter posting the interview that Saylor did. In an interview with Bernstein, Saylor states that MicroStrategy's endgame is to be the leading Bitcoin bank, play fiat games, win fiat prizes, and become a $1 trillion company. First things first, everything will eventually become a $1 trillion company because we're not measuring it in real money, we're measuring it in fake money. But moving through from this, a direct quote from Saylor is, "This is the most valuable asset in the world." Truth. The end game is to be the leading Bitcoin bank or merchant bank, or you could call it a Bitcoin finance company, Saylor said. So when I saw this, my first reaction was, hey, wait a second. Bitcoin Well kind of wants to be kind of the financial service company for Bitcoin in self-custody. What's the difference here? And then if you read on, he says, if we end up with $20 billion of converts, debts, $20 billion of preferred stock, options, $10 billion of debt, and say $50 billion of some kind of other debt instrument, we'll have 100 to 150 billion of Bitcoin. And then he, of course, wants to leverage that Bitcoin to kind of keep this going. But it's starting to sound a lot like what we did with gold nearly 100 years ago, which kind of started this entire fiat mess. He then goes on and talked about why the math makes sense, how they become a $1 trillion company. Bitcoin is going to go to millions per coin, and then we create a $1 trillion company. No problem. Let's get her done. But what I think is lacked in here is that what drives the MicroStrategy's success, which is Bitcoin going up in value, actually hurts this specific strategy, which relies on debt. Debt only works in a period of cheap money. Money is only cheap when it is useless because the future of the money that you're taking is worth less. This is why cheap interest rates are very, very good for companies to grow in a short period of time, but often hurt the company in the long period. In the comments we have, if he hasn't already, dude needs to start building up some formidable personal security. Only a matter of time before the major banks collectively wake up and start taking him more seriously as the threat that he is. Woof! That started as like a $5 wrench attack for his Bitcoin, but then ended with like some conspiracy that all the banks are going to want to attack Michael Saylor because they're kind of threatening their business model. Frankly, I don't think Michael Saylor and this kind of redefined MicroStrategy's strategy, man, that feels weird to say, Microstrategy's strategy. This Microstrategy strategy actually threatens the bank's structure as much as it kind of validates and maintains the bank structure. Because if we get more of an economy that continues to be reliant on debt to grow, then I don't see how a Bitcoin standard can come into play. I don't see how Bitcoin and self-custody actually becomes the valuable asset that it's promised to be inside of a sound money economy, because we just have paper Bitcoin. We have paper Bitcoin that's once again controlled, that's once again manipulated, that's once again able to be fractional. Here we have Michael Saylor kind of pushing Bitcoin, into this fiat system. When is Saylor going to begin buying cash cow companies and converting their balance sheets into Bitcoin? See, this is the strategy that I personally think is the lowest time preference, highest long-term reward, but also requires the most patience for a Bitcoin company, or for any company for that matter, that's kind of adopting this Michael Saylor MicroStrategy strategy. Personally, I don't believe he has the patience. I think that once you are the largest growing company in the world, once you've sold debt on your debt, once you have options being sold on your stock, you are now in this infinite money glitch. And the problem with Ponzi schemes like this is you have to keep them up. Bernie Madoff was doing just fine until he got caught. And that's how all Ponzi schemes work. And the MicroStrategy's Ponzi is kind of looking like the same way. They have to now continue in this infinite money glitch until the bubble pops and until they come crashing down and everything goes to like NAV, which would be, can you imagine? MicroStrategies at NAV is just the worst case scenario for so many people, probably including Bitcoin holders in self-custody, because people are so closely relating Bitcoin price to MicroStrategy's price. It would just be a disaster. MicroStrategy's at NAV is a lose-lose scenario for everybody other than people with dry powder that want to buy Bitcoin. They also have, it's all physics. Thank you. It is all effing physics. That is, this is my kind of Twitter account. MSTR will build a fractional reserve system on top of their Bitcoin pile, exactly like people did with gold. Yes, this is what I'm talking about. We are applying these fiat games that ruined gold, that ruined the economy, that ruined opportunity for future generations, and we're applying them to money that is objectively better than gold. I don't see how this is a winner. But he goes on to say, Saylor will build one of the biggest bank in history, Rockefeller 2.0 in the making. I don't think he's wrong here. I think everything that this physics master is telling us is facts.
My point is, wouldn't you like for JP Morgan to just pay you 5% of your Bitcoin value risk-free?
I mean, ideally, I'd like 500%, but I want to keep my Bitcoin more than I want the 5 or the 500%.
This is such a good point by Safe, and it really brings us down to time preference. 5% on your Bitcoin in fiat terms sounds amazing, because for the long period of time leading up to this period of time, it's kind of been risk-free. JP Morgan's seen as too big to fail. They'll get government bailouts. That's a guaranteed note. The risk that they disappeared is, we'll call it 0, and 5% for zero risk is great. This is fiat. This is not the real world. This does not involve physics. But on a Bitcoin standard where you physically cannot, governments cannot bail out Bitcoin that get lost, that get hacked, that get stolen in the massive honeypot that is custodians. You cannot bail out a Bitcoin bank for losing customer Bitcoin. It just is, it's physically impossible without changing the root fundamentals of Bitcoin.
No one's going to pay 500% interest on a loan.
Yeah, and I think the 5% as well. I mean, if everybody's got their Bitcoin in 5%, well, how are you going to make more Bitcoin? Eventually, you're going to have more Bitcoin needs to be paid than there is Bitcoin in existence.
I'm not talking about issuing more Bitcoin. I'm saying that the current risk-free rate, if you have money at JP Morgan, you put it in a money market, it pays 550 basis points. So wouldn't you like to get 550 basis points on your Bitcoin balance without converting it to dollars, right? Right now, you have to convert it to US Treasuries to get 550 basis points. But if you do it, it's effectively risk-free. I mean, it's pretty close to risk-free.
So this is where, and I've seen this clip, obviously Saifedean goes off about how it's not risk-free. And I want to just highlight the differences between fiat in someone else's custody and Bitcoin in someone else's custody. Fiat, as we all know, has never been in our custody. Even the dollar bills that are in your hand can be made to be illegal overnight. And so the fiat, we've always kind of just grown up with and accepted this overlying risk that the money that we have isn't really ours. It's not really in our control, which is great if you lose it, which is great if someone steals it from you, because you have kind of this big brother, daddy government is able to come in and fix the problems. All good. We'll print more of that thing that you never controlled in the first place and just give you more of it to fill the hole. But we don't have anyone in control of Bitcoin. Bitcoin is arguably one of the first assets that you actually can own and can control yourself. They're just apples and oranges. We're not comparing fiat with Bitcoin. Obviously, if I could earn risk-free Bitcoin leverage, that would be great. But there's no such thing as risk-free leverage. The only way you are able to get leverage is by adding a risk multiple.
I don't think it's risk-free. I think it works with fiat.
Once the U.S. government fails, the U.S. government's not going to let J.P. Morgan fail.
Yeah, but the U.S. government has already failed several times over the last century. In 1934, they defaulted on gold. In 1971, they defaulted again on gold.
Okay, well, fine. So now you're going all maxi on me, but if that's the point, let me just make the point that there's no way that El Salvador is going to pay their expenses without selling their Bitcoin if no one's willing to give them yield on the Bitcoin.
This is the point. I am one of the people that believes over a long enough time frame on the Bitcoin standard, debt probably disappears because the risk involved to producing that debt is so high because we're going to have money that works. I do believe that it is better for the world if they do earn a profit and then spend the profit in the economy, spend the profit in the world.
Right. In your world, if you have expenses, you're going to have to sell the asset.
But you're going to have incomes. So you cover your expenses from your income and you keep stacking sats and you grow up your stack forever.
Well, the point is, if the capital doesn't generate a return, it's a non-performing asset. So you need to address the issue. If I put $100 billion into Bitcoin and I get 0% yield, that's just as bad as I have $100 billion in US bonds that pay 0% yield. In both cases, they're non-performing assets. I'm going to have to sell my house, my kids, my whatever to pay my hospital bills if I don't get any yield off of my assets. It's non-performing.
Look, I mean, I'm not saying there's anything wrong with it, and I'm not saying you shouldn't do it. I'm just saying that in a world in which the money supply is fixed and there's no lender of last resort, in a world in which JP Morgan doesn't have a magic money printer, because JP Morgan prints money. It's not just the US government and the Federal Reserve that print money. JP Morgan is also able to print money, and they can borrow from the Federal Reserve at the lowest interest rate.
Right.
So in that kind of fiat privilege system, they are able to offer you 5% because they are printing that money. They're going to be able to pay you. They make the $1 billion that they lend you in the first place out of thin air, and then they get money from the interest that they make on other people's billions of dollars that they made out of thin air. That game stops in Bitcoin. There's no lender of last resort. So now, if you're a 22-year-old and you have a business idea, you need to find somebody to get you equity. And I don't see that as a problem. Why is that a problem? You get equity, you share in the upside, you share in the downside.
10 years from now, we're still going to have the dollar, safety. We're still going to have banks. We're still going to have governments, right? You're imagining a world where the governments and the banks go away. It's not going away.
Oof. It's not going away. We can see his time horizon shrinking because the closer you get to fiat, the shorter and shorter and shorter your time preference has to be. I think we can see him turning from, hardcore maxi into probably fiat maxi, someone that is going to care more about this system, this punitive system that kind of rewards the lucky and few, using the back of the asset that promises abundance for many, but he's going to conflate the two. And ultimately, I think this is going to be one of the most heroic rises and crashes in history. And it will be because you took a Bitcoin standard, tried to apply fiat, and lost. Off the back of that video, we had Bitcoin does not need yield. Louder. It would otherwise destroy its premise of hard money as it introduces inflation and the loss of purchasing power. He's showing ignorance on fundamentals. I am so bullish on normal people like Dimitri and like myself and like you watching right now understanding this. It is so good that we as a society understand this and kind of like, don't participate in these fiat games. What do you think? How do you think this MicroStrategy shift, this shift towards turning Bitcoin into this fractional lending borrowed asset that we kind of, in my opinion, tried 100 years ago? Are we different? Did I miss the mark? Is this different than the fractional lending that we've done on gold for the last century? Or is it the same? How does this end up for Michael Saylor, MicroStrategies? But honestly, most importantly, the people that have bought the story, that buy a company that is so overbought that it has to now sell the future of other people overbuying it is a good thing. Let me know. Tell me what you believe. Tell me how you think this could end. and most importantly, stay sovereign.